show up. I finished it in 4:01, which sucks because
Yeah.
it's a 4-hour marathon.
Yeah. So for Bitcoin, welcome back to the Bitcoin breakdown. We're seeing Bitcoin hit another bottom here, right? Let me share this shorts. Kind of what we were talking about before we hopped on live here was, were these shorts here? And I think, Brendan, you kind of had an interesting insight on how the shorts, who's actually shorting this, and what does it kind of mean for creating some sort of bottom.
Yeah, so one of the things that I look at when I see this, and again, I'm not 100% sure. It's hard for me to digest who this marketplace, involves, right? Is this sophisticated investors, crypto hedge funds, or is this just a lot of paranoid miners, or is this just, is this largely retail? I wish I could really dissect, who makes up this, this short basis. But regardless, let's just say blindly walking into it. Like I was kind of saying earlier, if you follow a herd, you generally make less profits, right? Because you're never the first in and you're never the first out. You're just kind of following the wave. So let's say if you're a football player, you don't play a football game, and expect to win if you're only playing the second and third quarter, right? You're missing half the game. So when I look at things like this, I think, I would rather take the other side of the equation for a couple of reasons. One, I think I'm savvy enough to establish proper, downside protection. So, there's more juice to the upside than I believe there is the downside when you're looking at shorts at all time highs. And if we look at these peaks of where the all-time shorts happen, look how quickly they kind of drop down. That says something to me. But it also, maybe, there's a probability that I'm just wrong, right? Because I don't have any real data or, to really base my, my thesis off of. But the only thing I can go back to is say, okay, at these shorts, at the highs of these short interests, these 4 peaks, where did the stock or where did the coin sell off to? And, pretty much every time you get down to, 6,000-ish in Bitcoin, there's a bid and it stops. So, if it were to break 6 and, let's say to the last of my memory, boys, what did it drop down to? Like, depending on what exchange you're on, 5,700, maybe, and then around there, it bought back pretty quickly. So I always use that as a bit of an indicator to say how dedicated are these shorts to it, and what's, are they pressing it as this thing's going down? And I didn't really see it. So when I see things up like this, I'm inclined to go long, but I'm also reminded that I have no real, backbone of information as to why I want to go long, other than the fact that I know that when people are off sides and the market moves against them, their desire to get out of their risk and end the pain is significantly more aggressive than it is them walking into a trade, right, into a long. So, if you're going to go long, Bitcoin, you may be patient and pick your points as to where you kind of want to surgically strike and, and make your entrances. But if you're wrong and the market's just falling apart, the normal behavior to just get out of all your risk and sell it is pretty much the same, right? They say that the feeling of losing money, amplifies 3x by, the joy of making money. So when you have that fear base in you, you're quicker to get out of all your risk because you just don't know, how bad the pain's going to be. And I think people walking away from the financial crisis, if you were invested in the stock market and things like that, you probably have a lower risk tolerance level than you might have, historically. And people lost fortunes, in that market. So I think and that wasn't really all that long ago, and it's constantly talked about in the news. It's constantly brought up right now. I mean, in the last year, I've heard nothing of, but sell-side research flagging a potential recession in the next 2 years.
Yeah.
And, I think recessions are healthy. I think the proper undulation, recessions are not healthy. I think proper undulations of the stock marketplace are healthy. I should say it that way. To walk into a potential recession and protect yourself on the downside, maybe move more of your money to cash in the time frame and just sit from the sidelines and watch, and then just evaluate it with your own minds of like, what does this feel like? How bad is this? And if it's awful, well, God bless you for putting your money on the side. But if it's not that bad, then I think it just reiterates what the general marketplace, those who don't have a voice, and but have money to put into the markets, what they're saying and what they're feeling and how they're responding to market action. So, taking that for what it is. I look at what's happened with these high short interest, ratios. I don't know what this looks like or who's involved, in doing these. If these are sophisticated minds, great. Maybe they know something I don't. I just know if I follow the herd, then I'm not really benefiting anything. But when you looked at the chart that you put up earlier, there were aggressive covers shortly after 2 of the last 4 peaks. So 50% of the time they're wrong. Okay, so that's fine. Maybe if there's a little bit of juice to the upside, then I'd rather go long this marketplace, but have a very, very low risk on it. So if I'm wrong, if it's down 10%, I generally blow out. 10% is usually my threshold, and say maybe I've got the right idea, I've got the wrong timing, and timing is everything. But when you have a bunch of people on the other side of the trade who, if the market goes up a little bit, might be quick to cover their shorts, then you're going to see the coin price kind of run. And if you have a lot of algorithms that are making up most of the inside marketplace, they're going to digest this because of AI and other intelligent things that are built into these marketplaces, and the sell side liquidity should get a lot more thin, especially as the algorithms detect buy side strength, and they're not going to want to sell it at 6,400. They're going to move up 65, 66. Right? They're going to continue to evaluate the buying strength and limit their risk for selling something at low prices. That's what they're structured to do. So, if this type of a thing, if we happen to see it hit 6,000 and rally, I imagine that the short interest goes down pretty quickly, and then people got to cover their shorts. So that's a big buy power out there. So that's the reason why I would be more comfortable going long. At levels where Bitcoin's kind of 62, 6,400, whatever. It hasn't really broken that 5,000 range in a while, and if it does, when it did, it didn't really hold that level for very long. So that I think okay at a $63, $6,400 or coin price, my downside risk is 100 to 400 maybe points. I'll take that risk all day long. But that said, your upside really hasn't been expressed that attractively either. You're constantly seeing lower highs. The bandwidths of the undulations are kind of compressing, and they're compressing in a downward cycle. So, your risk to the upside is, you just got to kind of play it. I mean, I think anytime I see something in the high 6s, low 7s, I'm inclined to sell. And then I'll just sit on the sidelines and wait for it to come back to 6,200 or lower, and then I start buying it back again. But then again, as we're building a business, I'm not actively trading like I used to. I'm not a day trader in these things. I'm looking at these things more on a weekly basis, because I'm not there to play it for 2-3 percentage points here and there. I'm there to play it for the 5 to 10 percentage point moves. So that's where I think I get the juice. That's where I think my commission dollars make more sense for me. And that's just kind of how I quickly evaluate these charts in this kind of type of a marketplace. Given the short interest rates are high, great, no problem. Prove me wrong. But I think that there's more risk to the upside than to the down, because every time it hits those low $6,000 ranges, there's a bid and there's a floor. Yep. So until it meaningfully breaks that floor and holds that floor and really establishes a new low, then I just play the cycle. I play the ranges.
Mm-hmm. Yeah.
Yeah. Oh, sorry. Go for it.
Go ahead.
I was just going to say, I mean, we've been pretty consistently setting that base right below 6,000, and I know there's a lot of speculation that there's, various influencers as to why that's kind of where things are sitting. And a lot of it, I think, has to do with mining profitabilities. But then also, every time we get down to these levels, we see this huge spike in shorts, and there's almost never any follow through with it. And correct. Someone was posting on crypto Twitter this morning, it's kind of in BitMEX and Bitfinex's interest to try and squeeze on those shorts. They're a centralized organization. They can do that. They
power to do it.
Regulation that's saying this is illegal. You can't be doing this. You can't play both sides of the market and kind of screw your customers out of their funds. And so it's almost like everyone just keeps coming back. They get hit and then they come back and they say, oh, well, we're getting back down to 6,000. We should probably short it. And then lo and behold, it doesn't happen. Now on the upside of that, every single time that's happened, we, like you said, are hitting those lower highs, which kind of speaks to consolidation, but also that potential for a breakout as kind of the downward pressure loses momentum. So
imagine what would happen if we broke through the ceiling of those lower highs. The insecurity of the marketplace, could largely react, and then you see those shorts get squeezed. And I think these, again, what do I know? But I believe that these shorts are simply playing certain ranges. And if it breaks those ranges, there's gonna be a panic. And that's where I want to be ahead of them, to be long, because I think my downside is limited and the upside is questionable, right? And if it runs back into the ceiling and stops, okay, fine, let it go.
You just need to wait for CNBC to say it's all going down.
Yeah, I shouldn't say that. Guys, 24-hour media is a problem, in my opinion. I think that they amplified, the reactions to the financial crisis. I had a guy that I worked with in California who was at one of his son's soccer practices, and his father next to him said, "Hey, what do you do for a living?" And he said, "Oh, I work for a hedge fund." And the guy's taken aback. He said, "Wow, I can't believe you admitted that." Said, "What do you mean?" And it's only because CNBC's out there telling people, "Oh, naked short selling is the reason for this downward cycle in this market." No, it's not. It's because people who are making $250,000 a year are long $4 million worth of real estate, and they're trying to get rich on that. I mean, everyone was to blame. People got greedy and they got caught off sides. Hedge funds are not the devil. Hedge funds are the balance. You can't just have mutual funds going out and buying things long and selling them. There's no balance in the equation. It's the hedge funds that do the proper valuation. That's the valuations of stocks and say, you're overvalued. I'm going to short you until you come back in line with your peers, because that's where your revenues and that's where your numbers really come into play. And so for a guy to respond like that, it just, it always gives me a negative connotation to 24-hour media. I think there's a beauty in media, but I think that being forced to say something for 24 hours a day is a problem.
Yeah, I think we saw that just recently with that Hurricane Florence, where they were pretty much forced to talk about this for 24 hours. I mean, there was even like dramatized, journalists. I think someone got in trouble for it, but I mean, it's just the same thing. They latch onto something, and it's through fear mostly, to get them to continually turn in.
That's what news is driven on. I mean, how many times do you see news just being like, "Oh my God, look at this great thing that just happened"? Like, they don't. People want to hear the negative stuff, and that's why, I have to put a filter on when I read news. Even when I'm reading news in the crypto markets, and you're talking about miners pulling out of the marketplace because it's uneconomic, the cost of power relative to, the regular day-to-day business of how they have to keep those coins, or those rigs profitable. Is something. But on the other side of the equation, nobody's talking about, while the devaluation of some of these coins, yes, does make it unprofitable. I mean, we have a family mining operation, so I know this firsthand. I was chatting with my brothers about it this morning, who kind of control that operation, and that nobody ever talks about. Well, yes, there's a price point where the cost of power and your rigs and your rent and whatever in that facility adds up to a particular number, and maybe that number is getting at the point where it's unprofitable for these miners to mine. So miners unplug, right, and they just walk away. Well, there still needs to be miners to go into the marketplace and do what they do, and the valuation for those miners that stick around is going to go, should go up. You should be able to collect more when less people, when there's less competition to mine for the same coins. Nobody talks about that. They just want to mention the downside, which is real, but they don't ever talk about the other side of the equation, which always makes me laugh.
No, it's always really interesting to really think about these different dynamics in play from an economic standpoint. All these different forces that maintain the network. Specifically something like that with mining. There's always the incentive to mine, and if there's not the incentive to, if the incentive does drop, that just means that more miners are going to rush in because it's going to be more profitable for the profitability finds that equilibrium where the the amount of miners on there is whatever the current price is.
Yep. And we took a different approach to it. We have an immersion technology which keeps our rigs cooler than cooling with air. But we're here in Texas, and it's hot in the state, and you got to find a better way to do it if you want to mine and your electricity costs are X, and they may be higher than places like Washington or other countries that have cheaper energy prices. You got to find a way to be competitive, and the way that we found it was by a liquid immersion. You know, we don't get hotspots in our rigs. We keep everything at a pretty cool level across, so the rigs not only last longer, they operate at a cooler level, and which means they hash more aggressively than not. So we've proven that we can save 50% in power with the immersion, and our hash rate or profitability in these rigs went up by 25%.
Yeah, I think that's always really interesting with this absolute competition for this energy, and it's always such really cool innovation that that's fueled by this competition, where you have that immersion technology reduce costs, you have the renewable energies now, the energy kind of decentralization where there was a lot of renewable energy in certain places that was never profitable, right? Because you have to run lines, you have to get that energy from there to where it's needed. But for Bitcoin, now you can kind of use those, renewable energy resources. A lot of like hydroelectric dams up in Canada, for instance, or like, on the desert, wherever it may be. I think it's kind of an interesting point. And then you also have like, I was like last year, I remember reading in the news, like mining heated like groweries and nurseries for like vegetables and I assume other plants too, but I think it was kind of interesting.
It is solar, wind.
No.
I'm a big fan of going green if you've got the capital to kind of put in on it, and the government kind of backs you too. If you want to go green and you do a solar, the problem with a lot of the infrastructure within a lot of office buildings and warehouses yet. I mean, these things weren't designed to run the appropriate amount of, like, let's just say copper or wiring to outlets. And nowadays we're so energy dependent with our cell phones and our computers, and we have so many more electronics that we got to hook up to the infrastructure. A lot of these buildings is insufficient. So the only way in order to do a lot of it, I think lighting takes about 25% of your normal energy bill. So if you can go with LEDs, something that pulls a little bit less electricity, and you can then allow for a healthier electrical infrastructure for an older building that hasn't quite gone green, and the government will give you kickbacks if you build a business and you put solar on it, or you have some sort of energy efficient way of helping the grid, if you will, and it lowers your costs, and run the math on it and see if it makes sense for your company. But yeah, a lot of miners, farmers, a lot of people are taking these types of initiatives because why not?
Mm-hmm. Yeah, no, of course, and when mining, for instance, proof of work, it just incentivizes that even more. Because there's a lot of problems with that, sort of renewable energy, where you have this excess energy now, and what are you going to do with it? Well, now you could transform that into Bitcoin and sell it. Right. So just incentivizes that even more.
One irony out of all of this, though, is that a lot of miners don't look at things at the appropriate time frame. And Brennan, I'm sure that you're probably pretty intimately familiar with this, is that a lot of mining operations, the larger they get, the shorter those time frames become, because you have operating costs. And a lot of miners that I've talked to, they kind of don't have that level of foresight that things are going to come back down. And an example, so I do a lot of mining myself. And so last year, everyone was jumping on Ethereum and Zcash primarily on the GPU side for mining. And it was profitable, it was pretty significantly more profitable than the majority of coins that you could mine on GPUs at the time. But I took a handful of coins that I was kind of juggling between, and I was operating sometimes at a loss on them. One big one that I mined quite a lot of last year was Ubic, and I don't know if you guys are familiar with that. It's kind of an enterprise-oriented implementation of Ethereum. So they wait a significant amount of time to make sure that all the kinks and things are out when Ethereum does push an update. So it's a bit more stable for enterprise level stuff. But anyway, I mined that almost the entire time when people were mining Ethereum last year, and just holding on, knowing if I'm mining this at less profit or even a loss, it works out for me because I'm accumulating so much more than when you start mining it on the flip side, where it's like, yeah, you might get more USD relative profits when you're mining at those higher token prices, but you're getting less of it. And so it's the same thing with Bitcoin, that when everyone else is pulling out because, I have to operate at a 5% loss, I have to shut everything down, everything's done. But when you look at the longer time frame, you're accumulating so much more than when you're mining at 20,000.
Yeah, and if your accounting is buttoned up, then you've got you're running your business at a loss. You write them off against the profits you made when it was up, and you're collecting more coin to do so. And like there's, like I said, I love getting into it, and I love mining from the perspective that not necessarily do I believe it to be the most profitable venture if I'm looking at my actual cash dollars now, or if I were to really throw it into a marketplace and just start trading it. I think I got the skill set that I could arguably make more money trading that same cash than not. But the opportunity that I love with mining is, you can run an actual business, right? I mean, you've got all kinds of, if you have a good accountant, or you are a good accountant, then then a lot of these losses, when people really start pulling out in the news saying, "Hey, this is unprofitable, we shouldn't be doing this anymore," again, I love to look at the other side of the equation, right? I mean, I always ask myself, and in all business perspectives and all trading perspectives, what's the devil's advocate? What's the other side of the coin? What's the argument there? And if I just follow the news and I follow the herd, I'm not there to win. And I'll be wrong sometimes, but I'll be right. So, some of the best money managers on Wall Street say they're only right like 60% of the time, right? But they're so quick to recognize when they're wrong and get out of the risk, that then the alpha then changes and they can start making real money. Mm-hmm. But you can't be right. 60, 70, or 70, 80, 90% of the time, it's impossible. But you have to be savvy enough to realize when you're wrong and when you need to pivot. And even if you have to wallow in that down 5%, type of a time frame, but you're collecting that much more coin for your money, no problem. What's that down 5% look like relative to the time frames that you were profitable, and use that time frame to write off against your losses. That's what it's there for. Not everybody's profitable all the time.
No, and that's the thing. That's the irony of it, is that in those down market times, as long as I'm not having to sell out everything that I'm mining right then and there, and I'm able to hold it for that longer time frame, I'm usually mining at like anywhere from 3 to 10x what I would normally be getting in profits when markets are up.
Yeah, and if you believe that the game is not a race to zero, then you're playing the smart game, right?
Yeah.
And that's the thing with these mining operations, is like, okay, so if you operate with that mentality, take those profits off when it's high, don't go and spend all that money. Keep that to keep your operation running when you are operating at a loss, because it's just a delayed amount of revenue.
Yes. Yeah, I agree. But it also gives you the opportunity to mine coins you might not normally buy. Mm-hmm. Some of those, and if you clip a couple of the good ones that are, pennies, and all of a sudden those things turn into $1, like, you've won. That's a great, you might not necessarily want to put your hard-earned after-tax dollars into that type of a venture, but you'd be happy to mine for it for a little while if the mining rewards were good enough to kind of garner you that time and money spent on it. Mm-hmm. Certainly mine losers. But I'm sitting on them too. I'll write those things as zero, and I'll write them off against my taxes if I have to. But if they happen to do something, that'd be great, because I got like 150, 200,000 of these paperweights.
Mm-hmm. Yeah. Well, I guess we'll see. But I mean, that was a pretty good episode. You guys carried that conversation. I appreciate that. We didn't even get to the topic I wanted to hit, which was this is JP Morgan predicts the next financial crisis. It doesn't necessarily have to be JP Morgan. They're just one of a dozen I think I've seen in the last month about calling for that in the next 2 to 4 years. And I think next episode, maybe tomorrow, we can talk about kind of what that means for Bitcoin and what these managers are really looking for. When it comes to diversifying and being prepared for something like this. Is Bitcoin going to be more popular before, during, after, less popular? What the incentives are to actually hold it, but we'll leave that for next episode. Get people to tune in again. We've already been on for like 25 minutes, so
yep.
But yeah, be sure to check out the forum, courses, everything like that. Everything we're talking about is pretty much explained in these courses. The basic understanding of everything. So until tomorrow, guys, be sure to tune in.
All right. Have a good one.
All right. Catch you later.